Welcome to the Pulse Podcast, where we discuss the latest trends in workplace technology and healthcare equipment, from artificial intelligence to business transformation. I am Lauren Bango, currently the Global Major Accounts Manager here at DLL, and I am super excited to reintroduce a familiar name to this podcast, Mr. John Plantier, otherwise known as Johnny Finance. John, thanks so much for joining me today. For those who are tuning in for the first time, John is the Global Director of Enablement and Retail for DLL's workplace technology and healthcare sectors. He oversees what we call the channel, which integrates business through dealers and resellers, uniting various segments under one umbrella, including our global programs and our global major accounts. And for those paying attention, as I'm the Global Major Accounts Manager, John is my boss.
Well, thank you, Lauren. Pleasure to be here again. I know it's been a while since we gave an update as it pertains to macroeconomics and some of the impacts that can have in everyday life. So excited to talk about what's been going on.
Sure thing. We all know that inflation's been a hot topic in recent years. Many countries are experiencing significant fluctuations. In fact, according to the latest World Economic Outlook from the IMF, global headline inflation is expected to decline 4.2% in 2025, which is hopefully driven by advanced economies. However, we know inflation can be super sticky. Can you give us an update, John?
Yeah. So inflation can be super sticky, and it's important to remember that inflation is extremely regionalized. So, for instance, one country's inflation or one market's or regional economy might be dealing with inflation slightly different. A good way to think about inflation in just the global economy, if you had a balloon, right, and think about the balloon represents one regional economy, and that balloon can have more air in it, right, which is inflating the balloon to go up really fast, or you could take air out, right? The overall goal of that balloon is to move up at a slow and steady rate. That's what the economies across the globe want to do. But what happens is sometimes that balloon has too much air in it and runs the risk of popping. It goes up too fast, or the air comes out and it contracts, and that's a contracting economy there. You bundle that in with a whole bunch of other balloons, other different balloons that are representative of other regional economies, and still the overall goal is to slowly rise up as a slow and steady pace. But what happens is they go at different areas. You have all these external factors with the balloons, and think of that like different needles out there that could potentially pop this balloon. Not all balloons are created equal. They're different colors, made of different textures. And each of that is going to have a different impact on the regional economy. But the overall goal is to slowly rise up together. Now, one key important factor in that is the air that goes into the balloon. And that's the role of central banks. And central banks have this tool of putting air in and taking air out of a balloon. And what a central bank's job is in this whole equation is to say, based on the facts that I know, and forward looking and trying to forecast and looking into the crystal ball, do I need to put more air into the balloon or do I need to take it out? Right? And that's the role of the central bank here, and how to handle and deal with some of these inflationary issues. But at the end of the bottom line is, what inflation does, it erodes purchasing power. Something that costs $1 today could cost $1.25. Well, if that continues to increase in price, but you're still making the same amount of money, Lauren, are you able to buy the same amount of that product?
Nope, not at all.
No, you're not. So that company that's making that product, are they able to sell the same amount of that product?
Nope.
No, they're not. So that leads to a contracting economy or taking air out of that balloon and bringing things down, right? And that is the bottom line issue that across the globe that the world is trying to get a handle on based on their regional economies and some of the factors that they're dealing with.
Makes a lot of sense. One of the other things we've heard a lot about lately is tariffs. How do they come into play with all of this?
Yes. So going back to that same analogy of different balloons, think about tariffs as one of those potential points that could pop a balloon, right? And the job of monetary policy is to direct all these balloons through all these different potential issues that could really impact and pop a balloon or make it go down. So tariffs, in just simplest form, it's a tax on imports. And as we get into some of the conversations as to what tariffs do, tariffs will increase the price of goods, right? So a good analogy of thinking about tariff. Are you good with these analogies? By the way, I want to make sure.
I'm really enjoying the analogies.
What I try to do is put it in perspective. If I'm trying to explain it to my kids who are 6 and 4 respectively, well, how would they understand it, right? And think about a playground. And you have a bunch of different classes out on the playground with different teachers and different students. Little Johnny has a bunch of toy cars that he likes to play with. Little Billy's got a bunch of baseball cards. Well, little Billy says, hey, I want to play with that toy car that little Johnny has. And little Johnny says, I want to play with some of those baseball cards. And so they make a deal. They say, hey, you give me one toy car, I'm going to give you a baseball card. Cool. That's open trade, right? No tariffs involved. But then Billy's teacher says, hey, if you want to bring that toy into my classroom, I want a fee for that. I want a piece of bubble gum. And so then little Johnny has to make a decision like, well, all right, do I still want to make this trade because there's a fee now associated with it? Is it still worth it to do that deal? Then you have a teacher in another classroom that states, oh, hold on. You can't charge little Johnny that fee there. If Billy wants to put his product into my classroom, I'm going to charge you 2 pieces of bubble gum. And then you get into this retaliatory efforts of saying, hey, we're going to continue to increase. At the end of the day, what that does, it increases the cost of the goods. And when you increase the cost of goods like that, you sell less.
And John, going back to what you just said, as cost of goods increase, that also increases inflation. Am I following that correctly?
You got it. So it continues to get on this rat race here. If you tariff things enough and there's taxes imposed on enough, the cost of the goods go up, which will have an impact on inflation, which erodes purchasing power, which has a lot of trickle-down impacts in the economy. And the one thing the economy hates is lack of predictability. And when you have lack of predictability, that's where you get into this rigmarole. And we talked about the central banks. They have to be able to look into a crystal ball and try to forecast what they see things. When there's unpredictableness, lack of predictability, it creates a really weird environment here, right? The beauty of what we do in our day-to-day life when it comes to financing is that it creates a level of predictability. And so, for instance, you might not be able to afford $1.25 because of the increase from $1 to $1.25, right? That's a big chunk of a capital investment. You might say, Lauren, I'm not interested in doing that. But what we can do is we can say, hey, take your $1.25 and why don't you spread that out over 36 monthly payments, right? And that, Lauren, is it more palatable to say, hey, you can afford, 20 cents a month here versus a full $1.25 initial investment up front, right?
That makes a ton of sense. And our customers and our partners' customers still need this equipment. So all of this unpredictability, all of this is going on, and they still need the equipment to be able to do the business that they have to do. So it's a great way for them to be able to afford the equipment they need for their day-to-day lives.
Absolutely. So the segments, and let's look at what we do in our day-to-day lives when it comes to workplace and healthcare and technology. All of these items, they're not immune to the issues when it comes to tariffs or monetary policy or inflation. But I'll point back to what financing does within all of those segments is it creates predictability for that. And to run a healthy business, which we lend to businesses, you have to have a level of predictability, and that's what financing does for the world's economy here too.
Thanks, John. That makes a ton of sense. Before we move on, is there anything else that we should know about tariffs and inflation?
There is, yeah. So this is going back to that analogy in the schoolyard and the kids playing on there. There is something really important about it. So I was given that analogy about the retaliatory efforts and tariffs going up. Now the other side of the coin is that little Johnny might say, you know what, it's too expensive for me to continue to trade here. I'd rather invest in myself and get myself the skill sets and the resources needed to be able to make that product myself, right? Which is also could be a result of tariffs that they say, hey, it's too expensive for me to trade there. However, what we see in practice is that that's time, effort, resources needed to build that out, and you might not have that at your disposal. It also might be more expensive. And if it's more expensive to make that product here, throwing it out there to see if you're paying attention on it, what does that do to your cost of goods?
Whoop! It
goes up, and it feeds that narrative of inflation. So you get into this hamster wheel of inflation having impacts. Not in all cases, but in some cases it could be that. So it might be better off just to say, hey, you know, little Billy was better at that. It's better for me to continue to trade with that partner. So I think that's what you're seeing in the world right now. And a lot of our partners are trying to navigate, what does this mean in this tariff world? Are my sales going to be impacted by this? Do I need to think about my supply chain? One of the silver linings to COVID was people spent a lot of time focusing on what their supply chain was. And they said, hey, should the next pandemic hit, which, by the way, a pandemic could be one of those needles impacting the swath of balloons, am I prepared to take that on? Am I prepared to be able to continue to push my product out to the market? So we're now seeing this when it comes to tariffs, that the companies who were able to look at their supply chain, they might be more versed and be able, more adept to be able to deal with some of these headwinds as it comes to tariffs.
That's awesome. Is there anything else you'd like to share?
Oh, I mean, of course there's more share. But we can stop there. I think we gave my fill of little Johnny, little Billy, and balloons for this episode. For sure. But yeah.
So if you've tuned into the Pulse in the past, then you know that our favorite thing to do at the end is to ask our guests to share a nugget of wisdom. So John, or otherwise known as Johnny Finance, can you please share a nugget for our listeners?
I sure can. Yeah. So I've been thinking recently. It's come up, like, when I go to the grocery store and I go to check out and I hear the teller say, like, or I'm buying something online. It doesn't have to be anything. I say, how would you like to pay for that, right? And my one nugget of truth when it comes to working with our partners would be, how do you get that conversation about how you're going to pay for something and put it into the front of the conversation? The reason I say that is, you could be the best salesman in the world at selling your widget, but if you can't figure out how your party is going to buy for that, how they're going to pay for that, you're not going to be able to sell a lot, right? And so my one nugget of truth is, how do you accelerate that conversation and figure out their means and how they're going to pay for a product to be able to then sell the product at the end? So how would you like to pay for that? Hashtag financing, hashtag DLL, taking that piece, that very important piece of information, and making that one of the beginning parts of the conversations of the sales pitch. And that would be my nugget of truth right now.
That's a great nugget of truth. Thank you so much for sharing that and all of your wisdom on the economics and macroeconomic space. I look forward to our next month's podcast. Stay tuned. And look forward to having you back real soon,
Lauren,
John.
It's always a pleasure. You know, welcome to come back whenever you'll have me.
Thank you.
Bye-bye.
This podcast is brought to you by DLL Group. All rights reserved. This podcast is for general information purposes only and should not be used as a substitute for professional advice. The opinions expressed in this podcast are solely those of the participants. Nothing herein should be construed as legal, tax, financial, accounting, or investment advice. Please visit www.dllgroup.com/aboutus for further details.